and I'm going to blast through some charts here, and then there's definitely some specific things I want to draw your attention to. You know, I kind of titled this the great rotation, the big pivot. The next 12 months is going to be probably some of the most exciting times for trading that we've had in a long time. I think we're going to see food prices spike. We're going to see the price of things that are real spike. We're going to see volatility spike. We're going to see financial assets under great stress. And we're going to see the consumer basically collapse under the pressure of rent and healthcare and the cost of simply living. And I think it's going to freak a lot of people out. And, you know, politicians and the Federal Reserve have no one to blame but themselves. They just simply need to look in the mirror. They played a game here, and they drew themselves right up to the edge. So it's going to be really, really interesting to watch. And I want to be prepared, and I intend to profit from it. I am not going to be a victim of this. I want to come out ahead. And so we've got to really be focused here. And so we're looking here. I'm going high to low volume on my watch list, as I always do. Is that you know, right now? So I watched the my money flow indicators, and we hit peak again, and now we've had, this is third lower high, and so the big key here is for SPY is right here. Okay, this is equivalent of the 100-day moving average. This is the moving volume weighted average price for the last 100 trading days. And so just kind of home base, this is the area they'll defend, and we'll see if it's going to break through this time. So we'll just have to watch. But I've kind of given up on SPY for a while because at least from a day trading standpoint, it's just not been that fun. And on the credit spread side, I just got burned a few times on some of these these moves that are pretty strong. I don't have the insight as to where they're goal seeking, and so my indicator gets thrown off, and so I just set it aside and just focus on things that are working and making me money. Okay, here's the VIX. So like everything else, these algorithms they drive everything into the ground. So the way I look at it is they're just simply remorseless, you know, mathematical equations, and so they don't know any better. They live literally inside the game, and so all they know is the inputs given to them, and so they'll just take it exactly to where they have to take it. But you know, even though VXX is like a contango kind of instrument, which means it should always be trying to drive itself lower, there's buyers here, right here. So so there's definitely a change of character going on with VXX, and it's just something you should note. And then you just get these bursts out of the blue like this, and you know, and we're definitely due for one. June is typically a very poor month for volatility, i.e. it goes higher, and so be something to watch, and see if they keep the suppression algo running, or if it's run its course. I mean, they have built up a tsunami of sold contracts, and you know, somebody's going to be left holding the bag, but nobody really knows where these are residing. Does the Federal Reserve, have they hidden them, or are they somewhere else? Okay, the financials. This move here, you know, when you're trading, is if it's going up, they're right. So, but I'm looking out longer term and looking at it from a macro standpoint. I just think this is a move to get me the heck out of Dodge. I just can't see how the banks are going to profit with the economic conditions that we're in. This move is an early stage economic move, not a late stage economic move. If this move was all designed because the Federal Reserve is going to be putting more interest payments into their account because they raised the price of short-term money, but they didn't raise the cost to the banks, which is really a transfer from the U.S. Treasury directly to the banks. I mean, unbelievable. You know, they every time they do a quarter point raise, I think it puts $7 to $14 billion more per year into the banks, right down to their bottom line. It costs them nothing. But I think they're being overwhelmed. If you saw the home building stocks have, this is the third month in a row that permits and starts have collapsed. And then the auto market, big reports are coming out, tsunami of unsold cars, tsunami of non-payments. And all the kids today, tsunami of defaults on college loans. So the next generation who's supposed to be buying all this stuff is basically debt slaves to the U.S. government. I mean, think about that. We've enslaved tens of millions of our children to the government. Unbelievable. We made them indentured servants of the government. You cannot discharge this debt in bankruptcy court. You literally owe the government till the day you die. And you know, the colleges are happily participants in this, which is, I think, criminal in and of itself. The degrees that these kids are getting, and they're coming out. I mean, I personally know kids that are Mensa in intelligence, coming out with degrees, and you know, in the case of the one I know the best, college was paid for this person, but they're working at Subway. The kid's a polymath, and you know, it's just the opportunities, because he doesn't necessarily want to be in engineering, you know, and he wanted to do something more on the softer side of things. There's nothing. And I just look at him like, really? You know, you went to college and you're working at Subway? I'm like, come on. But they're not alone. I have other friends that run companies, and just the number of people applying for administrative assistant jobs with college degrees. We just simply lied to our children. We're artificially pushing up prices so that very few people can be extremely, extremely, extremely rich, and everybody else has to pay the price for it, and it's not sustainable. You know, math does work, gravity does work, and it's going to come down. And you know, unfortunately for us who own assets, we're going to all take the tumble with it. And that's what I'm saying. So the banks, this is the last hurrah. You know, they're talking about a reflation trade, which I'd be interested to see how that all works out. And I'll get to that when we talk about oil in a second. Apple, look at this. Okay, if this is not ringing an alarm bell, I don't know what is. And I mean, this was a major rotation out. Okay, and you know, somebody very smart got out, and Apple's the #1 capitalized company in the world, and which really makes me laugh, because you know, Apple could fall 10% and the SPY does not hardly move. Seriously, it's, you know, and the SPY is a market cap dependent, you know, index, you know, so the fraud is just permeating the entire scene. You just have to play with the cards in front of you, but you know, you don't have to like the deceit. But Apple just is gonna keep falling, just keep selling the rips. We're actually you know, I have a couple of my subscribers now are gonna test out the day trading money machine on intraday swings for stocks, and so we modified the signal for stocks, and we have one for futures, because they look at different time periods, because of the overnight action of the futures gives a different look back than the action of just regular traded hour stocks. So you know, if you look at SPY and you look at ES, the signals would not be performing the same. So I made some modifications to it, and so we're testing it, and Apple's going to be one of the stocks that we're going to put into the test, basically buying puts and buying calls during the day on a 15-minute signal, and I think we're going to make a lot of money on Apple day trading it using that signal. I think Apple's going to go back to 100, so somebody's going to make a lot of money here in the next next 6 months. I mean, who's going to pay $800 for an iPhone 8? Crazy. I'm not. Okay, so GDX. So a lot of people thinking we're going to come down and double bottom here. I don't know. I'm not too sure. We'll see. I went ahead and bought dust puts, and we've been trading it really well. And who knows? I might be a week early, but you know, it happens sometimes. But I think that a realization factor is going to come in, and a lot of people think the dollar is going to pop here and fly here, but I think there's going to be a lot of pressure on things that are real, and then I think we'll see a decoupling from the dollar and hard assets. So this will be my tell, is if GDX and the dollar start moving together, then I know just pour out of everything financial and into everything hard. But I'm confident that over the next 2 to 3 weeks, GDX will be flying higher. The Qs, we had a great week trading the Qs, and we have puts on, and so I've been writing it down, and we had a calendar on. We took the calendar off yesterday, and now I'm basically freeballing it until Monday, and then we'll take a look at it. But I'm in the money on the puts right now. I have 139s, and I'm just going to kind of see the action next day or two, whether I'm going to make a move to roll it or just to take profit and be done. But I think we're going to get another move down on the Qs, because I think there's rotation coming out of the fangs, and I think it's going to be I think the move is going to be big. I think there's a potential here for a move down to, right here. I'm looking at 135 area, and so I'm gonna just stay with it for the moment. And then I've been day trading on futures, which it's been flowing very, very nicely for us. Okay, we also have puts on the on IWM, and they're the 140s, and so last couple of days were good. This right here, I think, is just to close the week out, but we've had a calendar on it too. The calendar expired worthless on the short side, so we just pocketed that, drove the cost down on my puts, and now they're sitting at flat, and the short leg was profitable, and now I'm just going to keep an eye on it. But the key here with IWM, I think, is forming a head and shoulders pattern here, and I think it's down here below the 100 and the VWAP. It's going to drop. The only thing holding this thing up right now is the financials. Talk to UVXY. Okay, here's a trade we put on. We put it on yesterday, and we did a buy limit down at 65.50 area, and then drove all the way down to 65.20, and it popped. So now it needs to come over, and I think the oil trade, although I've been really bearish on oil and it's served us well, I think it's gonna rotate out. See, we now have a higher low right here, and the money flow is going to be turning up next week, and I think I'm going to ride this thing back up, and I think we're going to at least get back to this area right here, 68 area, so we get a 5% off the trade, if not more, and but I'll probably just trail it. So I'm just going to use my trend dots probably as a trail. I put an NVIDIA up here mostly as a proxy for the Momos, and it's been holding it up, but I think once this thing goes, there's a big gap here it needs to fill, and that would be pretty nice, huh? But there's nothing really holding this thing up either, other than just momentum. XLK is telling the story, so there's a broader range of the fangs. AG, we bought AG yesterday. It's way below my bottom of my my volume bands. These bands here are 10% away from the moving average of the volume weighted average price, and that's just telling me that it's just my version of a Bollinger Band. And so when you get these small caps that drive like this, if you could see right here, you know, I could be wrong for a couple days or a week, but it's going to drive back to the top of that range, and that's what I'm playing for. And so watching the Stokes here reset, and I think we caught it. You know, if this is a bear flag, we come down a little bit more, that's okay. I'll add 2 down here if I have to, but we're going to come back up to the top of this range and get back to $9 minimum. GDXJ is what's giving me confidence. They just can't sell this thing off. Okay, somebody knows something somewhere. Okay, real estate. Okay, Nugget we talked about. XIV, you know, just amazing to me. So what I did too, part of the day trading money machine, is we're going to add XIV to it on a 15-minute. You know, one thing, I don't know how other people have their trading services, but I also trade too, and I try to give as many signals as I can, but you know, I'm also focused trading. And so I put XIV on the shelf because I just think the bottom can drop out on this, but there's no reason why you can't day trade it. And I just been making more money trading futures and teaching people what I'm doing there, but I put XIV out on the signal too. So if the tests work well on it over the next couple weeks or so, that's what we're going to add to the day trading money machine for people, and it's going to be a signal coming right out. So I'm going to make it really easy for you guys, is that you don't have to even study the charts. I'll just send you a text, and it'll just say, hey, buy XIV, or it's crossing up, or sell XIV, crossing down. And so I'll take all the worry or interpretation out of it, and then you can judge the signal on its own merits, take the trade or not take the trade. But it looks good so far. Okay, the Amazon, you know, it's a very strategic company, Amazon. I just don't know if the timing is going to be right. I understand all the reasons why they did it, but I have some experience in the food business, so with some investments that I'm part of, and I understand the profitability and the profitable areas of the food business, and I'm talking about the retail level. And really, the only dials these guys can really pull is just basically to strip labor out of the equation. So I think what you're going to see at Whole Foods Market is, I'm sorry if you guys work at Whole Foods, but you know, half your jobs are going away. So so you're gonna, basically everything's going to be RFID chipped and packaged, and it's going to be a surreal place. And so you know, they'll probably put more point of purchase people out there in terms of not collecting your checkout, but actually trying to sell you things. But you know, I think Whole Foods did a pretty good job of understanding where the high margins are, and you're not going to get more out of that. So be interesting to see. You know, I think if anybody survives, it's going to be Amazon, but I think they're going to start getting too visible, especially since they own the Washington Post and they're antagonizing the President of the United States. I don't think somebody's thinking clearly there, but we'll see. But I would tell you the Whole Foods thing is bad for people at Whole Foods, you know, and you saw the reflection in the whole, across the whole retail spectrum. Everybody knows the jobs are gone, and I just sit there and I'm like, oh my gosh, what are people going to do for a living? You know, I mean, this is starting to get real now. I mean, there's no jobs for anybody who cannot absolutely add value, that can't go to China or can't go on a silicon chip. And what are we going to do? I mean, the only way it's going to work if we just get massive deflation, and that can match labor's value now. And maybe that's what's going to happen. I don't know. Um, gold didn't really sell off, other than this little move here, but it's still making, it's higher this month than it was the month before. And the Fed, quote unquote, is raising and becoming tighter, but apparently not tight enough. And so we'll see what happens. And I think the cryptos are telling everybody that currencies are in trouble. So we'll see. Mosaic, we took another shot long, so the trade is profitable. I mean, we just bought it Friday, so we caught it here. And so, but I have high hopes for ags, chems in general. And so we're excited. The farmers they have to pour this stuff onto the fields. A lot of them are getting late starts. The fields are wet, and the only way they're going to get the crops out of the ground before they get early frosts, or the planting season growth is so slow, is that they basically have to steroid it with potash. So I'm taking a shot on this on every dip, and I think we've turned a corner on Mosaic. And you can look at all of them. You can look at POT, IPI. I just follow Mosaic. Okay. Silver, looks like the Eiffel Tower here. Okay, a lot of people are thinking we're going to get back down to here. So we'll see. And this thing here is a Fibonacci from 2011. So the extension from that move, we're down 261 extension on that first collapse. And I just put it up there just as a reminder to me. But it held price, and I think that's where we're going to be lifting from. So buy silver on every dip. It's going to serve you well. Like I said, dust at the top of the bands here. Could push up like it did here. We shorted this area last time too, and made really good money. And then I've been shorting it every time it's been pushing into the 100-day, and so I intend to profit from this one too. I may have to push my trade out another week or two, but make no mistake, dust is coming back down again. Okay, we had a nice trade on SQQQ. We caught that move, but I shouldn't say a nice trade, like 1.5%. I'm exaggerating. But it was a profitable trade. First time I've traded it, and so I was just a little bit more, a little nervous. And I rather short the ultras than go long, but not everybody can or wants to do that, or the spreads aren't good. And so this is what I'm going to focus on, because I think the Qs are in trouble. UCO, I bought UCO calls, and I'm expecting oil to really come through. Same reason again, we're just way down. We're really stretched below all the volume bands, and these things tend to snap back, and that's my expectation. We made a double bottom. We hit a trend line on volatility. We've broken through volume boundaries. So and these short covering rallies are brutally fast, so I intend to be there. I went into Thursday with Friday with 4 contracts long. Caught a really nice move. My average gain on that was $3 a contract. I mean, not $3, 30 cents a contract. So pocketed about $1,200 on the futures, and then hopped out. And then at the end of the day, I started accumulating again. But I just put 2 contracts on for the weekend, and I bought UCO calls. So that's how I'm playing it. And so we're going to be playing oil from the long side now for a while. But make no mistake, I think this next move, once it fails, we're going to have a lower low going into the fall. I'm convinced. You look at that. If you look at the chart pattern on oil long term, it's going to revisit the lows of, I think it was 2014 or 2015. We're going to get down into the high 20s, low 30s. We just have too much oil. But if this thing moves up, 10 or 12%, in the meantime, I'm going to trade it. I'd rather be I'd rather be making money than long term being right on the macro. ERX, the way to play what we're doing on XLE. TNA, I think it's going to be a really good short once it breaks that 100-day. Oil we talked about. It's pushed down pretty hard. We got a double bottom here. And now I'm looking for it to push back higher again. Okay, I'm now full position on WPM. And I have to open the account. I haven't even looked because I'm waiting for it to put me. I gotta look at my average, but my average probably on 5,000 shares is probably just under $20. I'll have to look. Maybe we're just over $20. And now I'm just gonna harvest cash, and my intention is to, as money flow is riding higher, is to be just naked long, and when money flow gets peaky, I'm gonna just sell calls at or in the money, and to bring my basis down over time. And like I said, this is gonna be my big play. I think it's pushed down pretty hard here. I thought it may even get down to 1850 area, but it caught a wall here too. So something's weird. So somebody's buying here. Because normally they would let this stuff go all the way down to nothing, you know, because that used to be the way in the past. They would just be merciless. But people are buying here. And the nice thing about Wheaton is that it's really a play on interest rates as well as silver. So my view is interest rates are falling. I know a lot of people are thinking interest rates are going to go up. I just think people are delusional. You know, I and my investors with me, we own 3 companies, so we see, and we own them in the part of the world where everything is wonderful, and we see the stress and strains. So I just don't know what people are thinking about some brave new world coming out here. I don't see it, and so I think as interest rates fall, and you know, TNX, I'll show you in a second, you got I think silver prices are going to rebound. We're gonna push WPM back up to the top of this range, and once it breaks this here, then we'll set a new triangle, and then we'll be in a 22 to 26 range. But my intention is to minimum make 40% on this investment in the next 12 months, up to 100%. So I think this is a bad print here. So looking at biotech, it's been my nemesis. I've been trying to short it a couple times. It rebounds pretty fast, and this short worked, but not enough. I shorted it here. I couldn't get it to push into the money, and then just lifted back up. It came down again, but it didn't fail before my puts expired worthless. So I'm just gonna wait, and it needs to make a lower high, and then I'll probably take a shot at it again. Okay, we went long natural gas. Trades slightly profitable by, I think, 5 cents. So I think natural gas is gonna move higher. I mean, the Southwest United States is gonna get absolutely barbecued next 2 weeks. I think they'll use that to lift it, and things are just setting up. This was a telling move on the report, and now once it gets to 7, I'm gonna cash out when it hits here, and I'm gonna let it turn higher, and then I think we'll be playing it from the long side above the VWAP versus playing these moves into the VWAP. Just looking at things might be interesting that we haven't already covered in a different way. Okay, so wheat. Okay, so I think I'm going to do another report on the foods here, but just to say that I think it's breaking out. So now it's time to buy dips. Wheat and corn have been in 10-year bear markets, and I think that's turning. So this was an important break of a range here. Okay, now we're getting overbought here. Okay, and this last end of the day, the way my charting program works, this is not a real sell-off. It's really here. It does this weird stuff at the end of the day, but I think what we're gonna have here is we'll probably come back and test this breakout here, and then I think we move higher. The crop reports have been just awful, and I think we're gonna see the price of grains flying. Coffee, on the other hand, has just been, I mean, this is, we're at points now where farmers simply can't make any money. And if you notice too, I'll save my thunder for the food thing. I have some thoughts here really tick me off. Okay, you get DBA, which follows really as goes sugar and Joe, go DBA. Okay, drip. Okay, the way I'm playing the oil services, I'm shorting drip. And so I think we nice little head and shoulders pattern here. Okay, and we bought it yesterday right around here, and I'm expecting, we bought the 21s for July, and I fully expect to see drip make a huge move down in the next 30 days, which was ironic because last summer when I went on vacation, I was trading drip from the long side, and so it'd be pretty funny to see now I've flipped it on the other side. But I think the oil services, you already see with XLE, and if oil starts to move, they'll just crucify drip. Yeah, it was kind of flattish last 2 days after dropping hard with the FX. Yeah, dropping hard with the Fed move, but we'll see how long that lasts. So I'm still watching this. I wanted to get over the 100-day, but I think if we get moves in energy, then I think uranium will take a move too. See, sugar and coffee look alike. It's just weird. The tropical crops are just getting killed, and you know, going into La Nina year, it's usually pretty bountiful for food stocks. So in that part of the world, so it looks like that's what's supporting the price move down. So we'll just see where this ends up. Corn, I bought corn futures. When I saw wheat fly and I didn't see corn follow, I went ahead and bought corn futures, and really nice trade. I'm up $400 on them in a day, and I'll probably close them out Monday, and then look for a reload. But make no mistake, we're gonna be trading corn and wheat futures on the dips now, and I have JJG, so I just we now got our average down under 27, and so I'm literally just playing Pong with JJG, but keeping a position, because you never know, you're gonna get a report coming out where it'll probably happen closer to July or August, when people are just saying, OMG, we're gonna have massive failures of crops, and I think it's gonna come out of China, and it's gonna come out of the Ukraine, and then you're just gonna see overnight pops that you just can't even imagine. So I'm gonna hold a position, and like I said, so I'm half position again. So when money flow recycles, I'll buy back a half again. Just watching for an entry here. I'm pretty heavy already. And then here's the 10-year, 2.15%. You know, I've been told, hey, we're going up to 240, we're going up to 250. This thing's going to go. You know, so there's two schools of thoughts here with the Fed tightening, right? So we're going to rotate into other things, or people are just going to rotate into bonds and sit. And I think what's happening is they're doing a little bit of both. They're getting out of financial, they're getting out of tech. When I say financial, I don't mean banks, I'm talking about financial assets. They're getting into bonds, and they're getting into real stuff. And we'll know once we see oil and gold and copper, once they rise back above their 100-day moving average, then you know that trade's occurring. But right now, money's moving into bonds because it's driving the 10-year down. They dropped the VIX on Friday to save the market. And I think I'm done. So anyway, sorry for the really long post. I think there's good information here. It's going to be really fun next couple weeks. I'm on vacation, but I'll be doing reports most days, and I'll be trading most days. To me, this is fun. It's relaxing, and I'm going to be up early anyway, so I might as well trade a little bit before the tropical beaches call for me. You guys have a good one. I'll catch you later. Bye-bye.